Welcome back. So global cues are a little challenging, but we have plenty of stocks to talk about. Lots of result reactions coming through, and our team is standing by with the list of CNBC TV18 top stocks to watch for the day. Nigel, kick it off. Tata Steel looking good?
Well, Tata Steel's numbers actually were good. So you look at the absolute revenue terms, well, that was a little better than what we were working with. We already have the volume. So in all probability, the realization decline was not as much as expected. And even the consolidated EBITDA number was much better by close to around 8 to 9% in comparison to what most on the street were working with. But for Tata Steel, as I always mentioned, the segmental breakup is most important geographically. So the India business, well, the EBITDA per ton was mildly better than what we were working with regard to the poll that we threw up. And the European business, that's where the pleasant surprise came in there. The losses that came in from there were half of what we were working with. Focus on India first. On a year-on-year as well as on a sequential basis, yes, it was lower, but actually it was a little better, in absolute terms at more than 15,000 rupees in comparison to the poll. And guess what? In quarter one, things will be even better because steel prices have moved up and costs have moved down. Moving to the European business, the UK as well as the Netherlands business, the losses came down on both of them, and that's encouraging. What played out? There was lower change in inventories at Tata Steel Netherlands, post the completion of the alignment of the blast furnace 6, so that was good, and the decline in bulk gases as well as emissions with related to UK. So both those two factors resulted in UK as well as Netherlands. The losses did come out there, and the debt number was maintained despite having a capex of close to around 4,500 crores. These numbers look good. We'll wait by for the management commentary, but the stock will open up well in the green.
Okay, the stock will open up well in the green. We'll wait by for more commentary from the management. In fact, today at 1:35 p.m. is when you'll hear out from TV Narendran, the MD and CEO of Tata Steel. So you'd perhaps want to stay in and listen into that one. That's when you can hear it. And of course, through the course of the day on CNBC TV18. Well, the other stock that we're looking at this morning is Hero MotoCorp, and we're going with green over there. Finally, after months of speculation, the news is out that Hero FinCorp will be filing for an IPO. Now, the IPO will be a mix of a fresh issue and an offer for sale. The fresh issue will be about 4,000 odd crores. Ahead of the IPO, Hero FinCorp has been doing a lot to clean up its books. It wrote off bad loans worth almost 1,200 crores. The growth for the company has also been good. So it is a lender which has a presence in over 4,000 cities and towns across India and nearly 2,000 retail financing touch points as well. If you look at the growth, right, 9 months FY24, the asset under management saw a growth of 25%, sitting at a little under 50,000 crores. Now, Hero MotoCorp owns about 41.2% stake in Hero FinCorp. So we're going with green on Hero MotoCorp today. But one of the stocks of the day undoubtedly will be Cummins. Very, very strong set of numbers coming through. Vamakshi is here to give us the lowdown. Vamakshi, morning.
Well, good morning, Sonia. Well, yes, it's a big beat across the board. The revenue, margins, as well as EBITDA have come in much higher than what the street was expecting. In fact, revenue has come in nearly 6% higher. It's seeing a growth of almost 20%. And this growth could largely be attributed towards demand for CBCP2 products before the new norms come into picture from 1st of July. But apart from that, the standout this time around is the margins. EBITDA margins have come in at a record high. 23.5% is where they stand at. It's up nearly to 657 basis points on a YOY basis, and this improvement is largely being driven by an improvement in the gross margins, which are up nearly 328 basis points, as well as lower other operating expenses. The EBITDA has come in nearly 41% higher, and the net profit has come in nearly 58% higher as compared to what we were expecting. The management says that the CBCP4 range of products have been well received by customers. Keep in mind that Kirloskar Oil also had similar commentary. The exports might see impact in the near term due to global economic uncertainties, but they're striving for a recovery in exports. But it is important to understand whether these numbers are sustainable or not, and we will be waiting by for the con call at 10 a.m.
Okay, thanks a lot for that, Vamakshi. That's the big one of the day, Cummins. But let's move to Vivek. He's here to tell us about GMR Airports. Hi, Vivek. Morning.
Well, good morning. So GMR Airports will be the stock in focus. Company declared a healthy set of numbers as far as Q4 is concerned. Operationally, quite a sound quarter. However, on the bottom line, the losses continued. However, it's narrowed quite significantly on a year-on-year basis. Revenues higher by 30%. EBITDA very, very strong. 3.2 times higher, coming in at over 815 crore. Margins, 33.4%, almost versus just 13.5% on a year-on-year basis. So very strong over there. Finance cost, however, in shy, 823 crore is what the finance cost was, versus just around 672 crore on a same time last year. A loss narrowed significantly, 167 crore loss on the bottom line this time around. Now, talking about the key highlights, passenger traffic growth was almost 11% higher. One important update, the street was waiting by as far as the tariff hike was concerned for the Delhi airport. Currently, the current tariffs will continue for another 6 months and a representation will be made. And as far as the merger of GMR Airports with GMR Airports Infra is concerned, likely to conclude by Q1 FY25 is what the management has said.
Okay, all right. Got it, Vivek. Just 11% increase in passenger traffic. When you see the queues at the airport, you believe those numbers should have been even higher. But got it. Good quarter for them. Thanks very much. Manglam's here to tell us about Bata and Lemon Tree. How are those numbers, Manglam?
Well, in light of what happened with Campus yesterday, you would say Bata is tepid. But, Street wasn't expecting much anyway. So 2.5% revenue growth is what the company has reported this time around, just under 800 crores on the top line. Gross margins did see an improvement, but the company plowed that back into marketing, etc. As a result of which EBITDA was absolutely flat, around that 22.8% in terms of margins. And the net profit declined by about 3%. The company did say there are sluggish demand conditions, and they've added 24 franchise stores during the quarter, increasing their expansion through the franchise route. And they're hopeful of some recovery. So let's see, for starters, see some red on the stock. Maybe there could be some recovery. For Lemon Tree, it's a good performance that has come in. 29.5% revenue growth. The EBITDA has grown 22.5%. Now, typically, you would say that for a hotel company, EBITDA has to grow higher than, the revenue. But that's largely because the company has started a new hotel in Mumbai, Aurika, and at the same time, they are renovating some of their hotels as well. So some of those operating leverage benefits are spent into renovation, and Aurika is yet to stabilize. And in light of that, the net profit growth of 42% and occupancy of around 72% despite a higher room base is a positive. So see green on Lemon Tree, mild red on Bata.
Okay, thanks a lot for that. Well, Sudarshan is with us to talk about Alkem and why you should be watching that one. Sudarshan, good morning.
Morning, Sonia. So Alkem Labs had reported earnings during market hours and headline numbers were below estimates. But important to note is the con call takeaways. Con call happened post-market and takeaways are looking muted. FY25 revenue growth is seen at the current level of 10%, and company is looking to maintain gross margin and EBITDA margin within the current range. And it's optimistic about biosimilar business, but refrains from giving guidance. Brokerages too are negative on the stock. Jefferies has an underperform rating and target is cut to 4,200 from 4,470. HSBC has a hold rating and target is cut to 4,880. And JP Morgan has a neutral call and target is cut to 5,445 per share. That's the reason I'm going with red for Alkem Labs.
Got that. Thanks a lot for that, Sudarshan. Well, moving back to Vivek. Vivek, you're here to tell us about IRB Infra. Tell us more.
Well, IRB Infra, expect some pressure on the stock today. The promoter entity is selling almost 4% of the total equity. We had access to the term sheet, which was launched last evening. So IRB Holding Private Limited and Deepali Virendra Maheshkar together are selling close to 4% equity. The offer price range is in the band of 63 to 72.7 rupees a share, which is almost up to a 13.3% discount to yesterday's closing price. So at the lower end of the price band, the offer size is a little over 1,500 crore, a significant and steep discount. And remember, there's a lockup of close to 180 days after the sale of this particular block that the promoter entity will be selling, and they will continue to hold a little over 30%. We are talking about IRB Holding. So expect some red on the back of this large block today.
Okay, block season is back, and how, Vivek? Thank you for that. Abhishek is here to tell us more. Abhishek, you're tracking some more potential block trades today?
KFinTech over there, sources tell us that there is a block which has been launched. Base issue size is about 500 crores, which can be upsized to about 833 crore based on the demand. So equity on offer in terms of base issue is about 4.1%, which can be scaled up to 6.8% depending on the demand. The seller is General Atlantic Singapore Fund. They hold about 38% stake over there. Price is around 712.5 per share, which is at a discount of more than 4% to yesterday's closing price on NSE. The lock-in is about 60 days post this transaction for the residual stake sale if they intend to. General Atlantic will hold about 31.2% stake post this transaction. IFL Securities is the sole book running real manager to this issue. Now, sources do tell us that TPG Asia that will sell stake in RR Cable as well. Floor price is about 1,700 per share. The discount is very low at just 1.1% to yesterday's closing price. Offer size is nearly about 958 crore. Equity on offer is 5%. It is a clean out trade from TPG in RR Cable. IFL Securities is the banker to the deal. Back to you.
Okay, thanks a lot for that. Plenty of stocks to watch. So here's a quick recap. Stocks with positive news flow: Tata Steel, Hero Moto, Cummins, GMR Airports, Lemon Tree Hotels and RR Kabel. While stocks with negative news flow: Bata, Alkem, IRB Infra and K Fintech. Let's take a quick break. On the other side of the break, Dipan Mehta, Director at Elixir Equities, will join in to discuss some fundamental analysis. And we will also be joined by Vidya Shankar Krishnan, who is the Chairman and Managing Director at MM Forgings, to discuss their Q4 numbers and the way forward.